Good morning, everyone. It is Thursday, August 25th, and you know what Thursday means? That's right, it is Throat Punch Thursday. All right, after a nice little hump day Wednesday, and looking here at our futures. Now, I know I keep pointing this out, and people are like, why do you keep saying this? Because it's important, right? So we can look at this many different ways. We can look at these as simple, like a bull flag here, move up, we consolidated, moved up. How does this look here? This could be a head and shoulders, which is a bearish look, right? But longer term, we could see that this could be a longer term inverse head and shoulders. Until we know, until the pattern's done, we don't know, right? We have to have the confirmation. But for right now, going into Jackson Hole, which the symposium starts today, there's going to be a lot of Fed speak out. Tomorrow, Powell will speak. And at that point, I think that I think he speaks early tomorrow. Let me just check on that really quick. I think it's at 10. Yeah, it's 10 a.m. Eastern that Powell will speak. I think we may just chop around into that. You know, everybody's kind of gaming it out and placing their bets as to what he's going to say. You want to know what I think he's going to say? We're going to continue to monitor the situation, use all the tools in our tool belt. We're going to work on tightening and running off the balance sheet while keeping a check on inflation, but not moving so aggressively as to push us into a recession. There you go. Right? We're going to monitor the Ukraine war. We're going to monitor these things with China. Then we're going to allow it to play out. Okay, anybody? I mean, that covers all the bases. Do I think he's going to come out and say, well, you know what? We're not going to do interest rates. I think he's going to say we're going to continue to raise interest rates, but we're going to monitor. We're not going to say we're going to stick to a very specific schedule. He's going to give a target of what he wants the interest rate to be. Right? So this is just nothing new. Maybe how it's packaged looks a little different, but the market will react, and that's what we have to be ready for. This morning, we do have GDP that will be out in about 12 minutes. So by the time you see this, that might already be out. Jobless claims, of course, because it is Thursday. Tomorrow, we have trade and personal income outlays. So those are, and consumer sentiment, which has not always been a huge market mover, but recently it seems like it has a little bit more of an effect. But that's going to come out right when Powell's speaking, so it may all be bundled into that. So, okay, there we go. That's what we're looking at. But as of right now, we're looking to push up just a little bit more here. We use that 34. We've talked about that 34 in the on the ES, and you can tell that we, as of now, that is still our support. Now, this blue line that is dashed here, look at this, right? We have a lot of volume. This is the point of control, which is what we came through, used yesterday as support. Point of control is simply an area of extreme volume. So buying and selling occurring in that area. And when you see all these dark pools come out, you don't necessarily know if it's buying or selling unless you go and look at time and sales and kind of dig into those numbers. But those areas tend to be support and resistance until they're moved through, right? Because then people who have either bought or sold are going back and either buying more or selling more, right? So anyway, extreme volume, that's the point of control, and we've used that here. And notice it comes right along a fib line. That is not just coincidental. This happens quite often. But our next area of resistance, where we really open up, comes across the top of all these candles there, candle wicks here, and you can see we came through it before relaxing back, but we tapped that 20, big resistance, the 20 and the 8 here, really hugging and kissing, doing a little bit of a tango, and we'll see which way we get flung out of here. Do we continue to move down, or maybe another day up waiting for the Fed? Then we could move down. I think that in any case, I think that this is not a straight shot to the top or the downside, always back and forth, and that's what gives us the ability to trade and take advantage of that. So be open to all possibilities, right? Don't get pigeonholed into we're only going up, we're only going down. This guy says this lady says that. Who cares? Who cares what they say? Markets are forward-looking, and to be honest, they do not care what you or I think or what the Fed thinks. That's not what they price in. The market it's so organic. It has, all of these opinions coming into it, and it spits out a really good answer. So if the markets are looking, you know, they're taking some of these poor numbers and still moving up. Well, are they just looking, okay, well, we still think that we're going to be okay? And I can tell you, excuse me, I can tell you that as a day trader, it's really important, right? Because you've got to get in and out according to the market. But long term, it is better to be invested. If you are an investor, if you are looking long term, and I'm talking years, right? So a year to 5 years, 10 years, if you are looking for investing, right? Not just day trade, investing. It is better to be in than to be out. And if you don't believe me, take a look at this. Hold on. I can change this. Oh, no, I want this one, sorry. Tell me that it's not better to be in than to be out. Okay? So even with these big drawdowns that we have had, and they're relative. So some people will say, well, this is just so huge. Well, yeah, because of look at where we were, right? So it's relative. The plunge here, right? This back here, this had to be what, 2008. This is the 2008 plunge, right? So we've had these before, these big drawdowns. It's better to be in than to be out. So don't lose sight of that. But in your day trading, don't allow anybody, even me, right? So don't allow anybody to come in and tell you the market's going up, the market's going down, we're going to recession, we're not going to recession. It doesn't matter. It doesn't matter what we try and forecast. What matters is that we pay attention to the here and now, and when in doubt, pull every indicator off of your chart and just look at the candle. It tells you every single thing you need to know that's happening right here and right now. What do I mean by that? I personally like the trending candle. If you don't know what that is, it's under the style. You can go under candle. Here we go, candle trend. There's all kinds, you know, and it doesn't matter which one you like, as long as you use it very consistently. I prefer the candle trend look, and then look and hollow candles. Why? Because it tells you you can have a red candle, big open window. If it's hollow, that's an open window. It says, come on, take a peek. We're moving to the top side. If it's a closed candle, that means, yeah, don't look in my windows. We're going to take a break here. Okay, so that's that. Did not mean to get off on that tangent, but it's just very frustrating how often I hear, well, the market is going to do this. Don't tell me what the market's going to do, because the market will tell me what it wants to do. Listen to the market, not to your news channel, okay? Don't, it's not what Twitter says or any of those. Hey, listen, you know, get all those opinions, that's fine. Have your own opinion, but erase your bias, look at the candle. All right, so we have oil taking a little bit of a break here at the 200, still like energy. Overall, as we are moving, here's nat gas, as we are moving into colder temperatures. So here, you know, I live in the south, and it is still very warm. I'm like, what? I'm not even prepared for cold temperatures, right? Flip-flops are going to be on my feet for a couple more months. Well, that is not so in other areas of the world, particularly in Europe. So they are under a lot of pressure. They have Putin constantly kind of bearing down and restricting supply, and they have talked a lot about what they're going to do in as temperatures get more and more cold, and people, they need the right? You can do without air conditioning. Doing going without heat when you have the temperatures like they see, that's not, you can't do it, right? It's not a good outcome. So I am still very bullish on energy in general, not just oil, but energy in general. Looking here at nat gas futures, you can look at things like LNG and UNG to trade nat gas. But this morning I'm coming in and going to continue to look at names like Oxy. I really like Oxy. SM, DVN. I'm going to continue to watch all of these. All right, Bitcoin. Let's take a look at Bitcoin this morning. Ooh, well, I'm going to try to. Hold on one more time. Bitcoin, right, still continuing to consolidate, but above its point of control where there's a lot of volume. We can go ahead and push this. Oh, no, never mind. Let me try that one more time. you know what? Sometimes these just don't move the way I want them to. There we go. So you can see a lot of buying and selling happening right along in here. And we're going to continue to watch this. If we can pop back up above the 50, names like Mara, M-A-R-A, Riot, Hut, B-I-T-O. There's a ton of them. Take a look at those. Coin, right? So Coin isn't just Bitcoin, but obviously the platform for it. So it deals with a lot of other things. Just take a look in there. We have gold bumping up on the dollar, kind of weakening just a little bit. Just keep in mind that the dollar is still incredibly strong. So with that, gold has been not the best play here, but this is you know, a potential area. If we can move up and then put in a higher high here, maybe we're seeing that the lower high here in gold. However, it can also turn out to be a great big bear flag. So again, be open to both possibilities. All right, but what am I watching here this morning? Solars have been shining very nicely. And yes, I know this is a big green candle. Looks like we might be chasing it here. But I'll tell you what, when you really take a look here, we have a nice 3-8-20 squeeze. And like I said, solars in general have been playing pretty well. Pull back just a little bit, right? So we had a gap in here, which we did fill, but we had a gap in here. We settled right below the gap, looking for a push through that gap that was there. Again, it has been filled in continuation. I like the run. So all of these are in October 10/21. I like the run 35 call. Enter that around 34.54. Close it if it looks to close today below the 20 moving average. My targets are 36.45 and 37.76. And then just a breakout. All right, Zoom got walloped on earnings and looking for a nice little reversal play here. It does have potential for some more downside, but I think we might get a little bit of a reversal and move our way back into the gap here. So that's what we're playing with. Some of these have played out very, very well for us. Looking at the Zoom 85 call, entry at 85.07, stop at 83.50. You have to be really strict with this because if it starts to fall down, we could actually not just fall down to that 79.03, but actually break down versus breaking out. So be careful with that. The other thing, and the reason I said to be sure to watch the video for this one, is the 85 strike does not have a lot of open interest yet. So look for the volume today. Make sure that you see that the volume is continuing. That's really important here, okay? So you want to make sure that volume is building before you enter something. If there's not enough liquidity, do not take it. All right, so there we go. My target's 87.59, the 8 EMA, then 96.48. Lastly, Starbucks. Why am I choosing Starbucks? Because I have two little ones that refuse to let me sleep and I need Starbucks. Okay, not exactly, but again, nice little squeeze here going on with the 3, the 8, the 20. We've used the 34 very nicely. Had a little gap that we just filled, so looking for continuation off of this. 86.50 is my entry. Close it below the 3 EMA. That support there is at the 20. It also looks like maybe we have a bull flag longer, like if you draw it out, right? You could make the case here of a potential bull flag, right? So this is the weekly, bounce the 8 and potentially move on. So like the look of that overall. All right, so enter 86.50, close below the 3 EMA, and then that's funny, I actually forgot to type in my targets here. So we're going to go ahead and target the 85.61. No, wait a minute. I screwed this up. Well, I'll have to put those targets in because I apparently did not type them in right. Oh, I know what it is. Okay, so 85.60 is my entry, and I'm going to target 87.97 and then this high here at 89.93. There we go. Sorry. Apparently, I just didn't save it when I typed it in. So, my bad. I apologize. You know, I am blonde, you know. Okay, anyway, that is it for me here this morning. If you have any questions, reach out. HeatherC@GivingTreeTrading.com. It looks like numbers just came out for GDP and jobless claims, and we're moving up just a little bit, although I can't hear and I don't see the ticker coming across as to what it is as of yet. Continuing claims there. Oh, okay, so continuing claims are just a little bit lower. That is good. And GDP, oh, okay, so GDP is a little bit of a miss, and initial claims, okay, so good. So those are actually all good numbers. We'll see if we get continuation off of this today. Remember, Jackson Hole coming up. Wait, just chop around today. I will see you soon. HeatherC@GivingTreeTrading.com.